Welcome to the 2024 Economic Preparation Channel. I'm your host, Tony. Thank you for joining me on this August 28, 2024, Hump Day Wednesday. Please be sure to subscribe and tell all your friends to hit that like button and bell notification so they'll be notified when the latest video comes out. Appreciate everyone's support today. We're going to be talking about this inflation and how the American spender and worker is dealing with the inflation, and also the next wave of clean energy jobs. And is that going to be enough to be like a new deal like we had back in the 20s and 30s and 40s of this great country? But right now, we're talking about the typical U.S. worker out-earned inflation by $1,400 a year. This is what the data shows according to NBCnews.com. Even as price growth has surged in the pandemic era, earnings in the middle class and even lower class job holders have risen too. So in other words, the article is painting the picture that despite grocery and transportation and utility costs rising substantially during these last 4 years, this article is saying that our earnings were keeping pace with inflation. Now, we know that has never been the case in the last 35 years of earnings for Americans that inflation and earnings have matched. But because the very nature of inflation, or even I would say hyperinflation, is that wages and assets and everything rise as everything is in a bubble because the currency is being debased and devalued. So that part is true. But like I said, the media speaks in half-truths because we haven't got a real raise. Workers haven't got a real raise in the last 40 years, okay? A real earnings raise that outpaced inflation. So we know that to be true here. So you can see people in the store here. They're looking at the prices, trying to find the best deals here, but wages have not kept up with inflation, real inflation, which is at 8 to 10%. The official numbers are still around 3.5 to 4%. So that's going to be the problem here. Paychecks have never seen a real wage increase, and prices continue to go up, and now that means that consumers, Americans, have to pick out what they want and what they don't want, and be very conscientious of where their dollar is going to. And that's going to be the big problem here. We have dueling economic forces here. We have prices going up, but wages going down compared to the outpacing, inflation. And so that's not a good sign here. As you can see the graph here, average hourly earnings growth is down to 3.6% as of July 2024, but we got prices. Hey, it's supposed to be down to 3% according to Consumer Index, but it's still very high. Many of you have been telling me the prices for everything is high, and not just at the grocery store, but at the pump, gas pump. Energy bills are going up, especially as we head toward fall and winter. We're going to see those spike in those gas bills and other bills too as well. So everybody's preparing for that, bracing for that. But the economy is stable according to Yahoo Finance, but not very strong. This is what the analysts were saying this morning on Yahoo Finance. He believes the economy is stable, but it's not very strong. Obviously, that's something that we're seeing that everybody's experiencing here. Dow Jones, it's kind of a mix today, only down 33 points. S&P 500 is down 33 points. Dow Jones was down 160 points almost there. Crude oil's holding steady at around $75, $74 a barrel, but we expect that to go up, of course, as we head into the later part of this year. So the consumer is hanging on. Credit is still flowing, albeit at a slower pace here for consumers and also for businesses. But a lot of commercial retail space is dying. You guys can see that every time you go into your towns and cities. Look at how much vacant commercial real estate is available. All these signs for lease, for rent. The rents are just too high for these commercial spaces. For these little stores like restaurants or businesses offering services like sewing or wig stores or smoke shops. All those are going to be gone in the next 2 years because they can't afford the commercial rent space and the prices. And many of Americans are figuring out now that the American dream is not so affordable as they once thought it was. There's a mistalk here. The American dream of buying a home and raising the family is all but, quote, dead for many Americans, especially Generation Z, this new Generation Z and Alpha, whatever you want to call it, the new generations, younger generations behind us. They're having a tough time because home prices are up 50%. Average earnings only up 20%. Less than half that. Rents are up 23.5%, and the cost of living is up 20.9%. So you can see how that's affected the generation of people that's coming up now that's just starting to get out of college and trying to get their career going, or maybe they're in mid-career, or even retirees too as well, because the fixed income pension and all of that is great, but if it doesn't keep up with inflation, given cost of living raises, then you're kind of like stuck. You got to either downsize, or you have to take on a second part-time job to not be offset by all of this thing that's going on. So that's going to be interesting too. And mortgage payments have risen. I mean, the average price of a U.S. home now is a single-family home is up to $429,000. and it has not come down this year as we're spoken. And it's not just the mortgage, like you said, it's the taxes, the insurance, the all of the other maintenance costs that you have. It becomes a real hassle either way, owning a home. And that's why some people argue that renting is better because you get more flexibility, even though you're locked into a lease for a year or two, depending on where you're at. But you get that flexibility where you not have this hundreds of $1,000s hanging over your head and trying to sell it in a market that you may not get what you worth, because house is only going to sell for what it's what somebody's willing to pay for it, obviously. And before, people were paying over $100,000 over asking price. Those days are long and gone. Even in the Canadian markets or even in the European markets, people are not paying that kind of price for these type of houses no more. And they're not, the building quality is just not the same as you've seen here. If you got a house built anytime after I would say anytime after 2010, the building quality of it has gone down tremendously. But the price has not. Things breaking, destroyed before the warranties even up. They're giving you less of a warranty. You may get 1 to 5 year warranty on some of these new builds, and the structural warranty is not there for 10 years. You're just gonna have a lot of problems. So mortgage payments are up, mortgage rates are up, even though mortgage rates are down. But like I said, you got to factor in insurance, utility, property taxes, all of that stuff, and then general maintenance costs that you're gonna have running trying to run the household. And so look at that. So the U.S. clean energy jobs growth rate double that of overall jobs, report finds. So this is supposed to be the New Deal. This is what President Biden, President Obama, even President Trump, everybody was touting this new jobs deal in terms of the energy, getting this clean energy jobs, shovel ready jobs, build back America better, right? That may be the case. I've seen a lot of these solar farms and wind farms out in the country, in the Midwest and Northeast and out in the West. You've seen that as well, and I think it's a good thing. I think it's a great thing, but I don't think it's going to quite rival the New Deal we had with Teddy Roosevelt and all of that. Employment in clean energy business, including wind, solar, nuclear, and battery storage, rose by 142,000 jobs, are up 4.2% from last year. So that's great news. But if they get into unions and all of that, that may be a problem, and that's where these companies are going to leave this and go into automation and robots. That's the future. Augmented reality, AI, robotics, because they don't have to pay any benefits to employees or deal with any grievances. And so that's going to be the future more so than clean energy. And maybe if you have a trade in learning how to service these robots that are going to be coming up, or learning how to do maintenance or get them to do better speech recognition patterns and all that, there may be a future for some of these young kids coming in high school and stuff like that. That's what they're probably going to be learning, coding, how to code these robots. So let me know what you think about that. What is going to be the saving grace to get the U.S. economy back on the right track in the next 10 years? Is it going to be AI, automation? Is it going to be clean energy jobs? Is it going to be another country coming in and partnering with the U.S. to get it back on the right track? Let me know in the comments what you think. Thank you for your support. I'll be coming back with another live stream probably sometime later on this weekend, where we talk about the earnings report and different things of Nvidia that's going to be coming out toward the end of this week here as well, and other chip stocks that's supposed to be the saving grace of this stock market anyway. So talk to you later. God bless. I'll talk to you soon. Thank you for listening.